This is Smart Investing with Mike.wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike.wren.
Hello, everybody. You have opened up or started or pressed play on another take on the Smart Investing Show, where I am Mike Wren, your host. My producer extraordinaire, Mr. Chris Martin, is across the table from me as always. And remember, it is the podcast where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And with that, let me start the show by apologizing for us not having a podcast for 2 weeks in a row. And it was all due to me getting kind of really sick. You know, not
all you. I was literally stuck in my house, like the literal and figurative way of being stuck in my house.
Was it last Friday? Yeah, but when you were stuck in your house still, and we tried to do it on the Saturday, I still didn't have a good voice. I still would have been coughing and hacking, and you would have had to press pause.
I still would have, if I could have, I would have come out, because I've been married for 28 years, and so I was really trying to get out of that house.
Well, and Chris and I realized, too, that the listenership goes up when there's more content out there. So the content, us being gone, just wanted to tell you that I was truly sick, missed a whole week of work, and that we were not being lackadaisical with us providing content to you, all 15 listeners or 15 downloaders. What do we call podcasters? Do we call them listeners nowadays, or do we call them downloaders?
Listeners, followers. I hate the word follower. It sounds weird.
Yeah.
I just say listeners.
Okay, cool. Downloaders sound weird, too.
That's yeah. You can download anything. This you have to actually pay attention.
Press play. To. Yeah, okay.
Maybe we'll think of a thing, like, hey, the Renners. I don't know, the Mike Wrens. We'll think of
no, we're not going to go there. That's up for them to call themselves.
The Smarties.
Yeah,
Smart Investing.
That's.
Like, say hi to all our Smarties out there.
I think that's up to them to figure out what they want to call themselves.
Right. So, yeah, if you have a fan club, let us know the name.
And this is a show where we really, truly care about the content. We're not YouTubers where Chris and I are, in Thailand with different girlfriends every month trying to give you how-to videos. I'm sure the listenership would spike on that sort of, not our listenership, but I can see why there are viewers of that sort of thing, and we're not teaching you how to fix your dishwasher or your washing machine, but those YouTube videos are very helpful. This is something much, much, much more difficult because it happens to do with human behavior. But before we get into, before there's a point, and most of the listeners already know that sometimes we get to the point early in the show, sometimes we get to the point late in the show.
Sometimes there's no point at all.
Yeah. I will have a complaint because do you know who Joe Rogan is?
Yes.
Okay, you do.
I do.
Okay. Apparently he was a cage fighter at one time, or MMA fighter, maybe a little bit.
Like tiny bit. I think he really wanted to, and then he
got punched in the
announcer.
Face. Got punched in the face and figured out that's not for him. That would be me. In fact, I wouldn't even have to experience that to realize that's not for me.
I would get in the ring and go, I have to fight that guy? Well, it's been fun.
Yeah, see ya. You'll never.
I would be the guy that trains for 5 years and then walks into the ring. I'm not fighting that dude.
Yeah, that was one of the most... That was one of the most commonsensical things ever said by, or maybe the only commonsensical thing said by Mike Tyson. Everybody has a plan when they get in the ring until they get punched in the face.
Well, yeah. All plans are out the window.
And let me tell you.
Did it sound more like, everybody has a plan until you get punched in the face?
And that would be a lot of people with investing. Everybody's got a good plan until they see their statement go down. But I still have a complaint. Back to Joe Rogan.
All right.
He's got a successful podcast, I guess, about stuff.
The Joe Rogan Experience. It's like 2 or 3 hours at a time.
Really?
I've tried to listen to a couple, and yeah, they're long.
Okay.
He is smart in a way, but he also brings his own baggage.
Okay, like I do, like us being sick, yeah. We have less baggage than anybody else. It's just normal baggage.
I have baggage, but it's got duct tape on it, and you can tell. You can tell it's mine.
Mine is the old baggage that was up on top of a 1957 Country Squire Ford wagon.
My baggage is in a trash bag.
One side of the suitcase has bug guts on it. The other side of the suitcase has dust and scrapes, because when it's on
stickers from where you've been.
Yeah, when it's on top of the... So my complaint, Joe Rogan. Successful podcast. He has had a custom car made for him that was on the cover of Hot Rod magazine. And everybody knows that I'm a car guy. And you should see Chris did not just roll his eyes. He looked down. He looked down at his computer just now and thought, oh, shit, this is where we're going.
I thought, so he mentioned that investing, or he mentioned that Trump. Like, I was waiting for political, religious, podcasting reasons.
No, there's probably
going to
be
a car made.
There's probably going to be 4 people listening to this, maybe 14, that are going to find this interesting.
All right.
In Southern California, there's a guy by the name of Steve Strope that owns a shop by the name of Pure Vision. And he's not just a hot rod guy. He is, but he's a musician, and he has very good artistic restraint. Okay? Less is more when it comes to investing, when it comes to art.
He's a minimalist.
And when it comes to this car that he made. What he made for Joe Rogan is he took, I believe it was a 1969 or a 1970 Chevy Nova. Do you know what they look like?
Oh, yeah.
Okay.
No, there was a guy in my high school that was obsessed with Chevy Novas.
Okay, well, wait till I guarantee you that if the man that you knew in high school didn't die in a Nova and is still alive.
That could really be up in the air.
No, I know, because you live in Woodis Orchards, and I'm just next to the state line.
We didn't get cable for a long time. There's nothing else to do.
They grafted onto this, other than everything else being brand new chassis. They changed the Nova and put 1969 Camaro front and rear corner panels and door skins on this car. And you being a non-car guy, Chris is giving me the most blank look.
Well, I'm trying to figure. I recognize those cars. I'm just trying to figure out what that would look like.
If you're listening, if you're bored with listening to us, Google this new Chevy Nova. It is one of the most beautiful things that I've ever seen, and it's so restrained. It looks so cool from a car person, and what's cool is if a person didn't know that this was a 1970 Nova that had been done, when you were at a car show, nobody's going to realize the 1,000 hours of metal work that have been put into this car because it's so subtle, but oh so amazingly cool. Oh, so subtle. That isn't it, unless they painted it. Let me look at it. That's it.
Okay.
Now, if you notice, the body lines above the front and rear arches, those aren't there on a Nova. It's just slab-sided. Do you see how wicked cool that is?
It looks like, to me, it looks like an older car, but a newer artist got a hold of it, though.
The best.
Like it's a cross between 1970 and 2015.
We're talking frickin' Leonardo da Vinci of these old cars got a hold of it. And the guy that did the metal work looks like he could be an extra on Lord of the Rings.
Oh, okay.
Big beard, but
just Duck Dynasty looking dude.
Yes, and just a freaking genius. Just an absolute genius with his hands on this metalwork.
Judge not by the length of his beard.
Yeah, so let me tell you that making a car like that takes a lot of work for it to be subtle. Let me tell you, listening about the investment world, it's the same damn thing. There is a lot of work that goes into investing and building portfolios and moreover dealing with clients' behavior than the clients will ever realize. I tried to make it look simple, and I tried to keep hidden some of the ugliness that doesn't need to be brought out. It's if somebody's got a wart on the end of their nose, there's no need to say, "Hey, you've got a wart on the." You know what I mean? And number one, there's no need to say it. Number two, they don't like it being brought up. They know that it's there. And I have a feeling that when most people are freaking out in the investment world, I have a feeling that they know it. Sometimes they don't. Sometimes they are so wrapped up in their own world that they don't realize that they are being just a normal person, you know? They just don't. But I have a feeling a lot of them do. So where am I going with this? Where I'm going is this is going to be a little bit more of a psychological podcast than a nuts and bolts numbers podcast. But I'll try to throw in enough nuts and bolts and numbers because people like that.
Do you want me to play the Doors underneath?
No. Yeah, exactly. So what I'm on about is that first, let me say that if you're listening to this podcast and you're not a client of mine and you work with somebody else, cool. That's fine. You should take a gamble. You should take the plunge and try to set up a time to meet with me because we'd probably have fun talking if you're listening to the podcast, because it's always nice to work with people that get you. You know what I mean? That's why you have friends that have the same interests or different interests, but they portray them to you in a way that makes it fun. So if you're listening to this podcast and you're not a client of mine, I'd like to meet you just for that simple reason.
Well, and obviously they're open-minded about stuff, which is always a plus.
Yeah, exactly.
Because they're not listening to just the one person.
But I don't do this very often, but I'm going to take just a second and justify the value of my competitors, which I rarely do.
Rarely do.
So we're talking about the behavior of my competitors and how they might treat their clients. And luckily, I'm included in this. I think that most people in my industry charge too much for what they do. If they did a lot and charged a lot, that's one thing. But if they do butkus and charge a lot, then that's another thing there. I think most of my industry is the latter. But let's just say you're working with somebody that charges you 1% per year, which is more than I charge. But let's just say that they charge that. If that person is there for you, the listener, and they prevent you once every 5 years from committing financial suicide and getting panicked out of your investments and going to cash or investments that are quote-unquote safe, that are going to protect you from the market, that's the words that they typically use, or you typically use. If that person, man or woman, is able to reassure you enough that you don't get rid of your investments, then what you're paying them is worth magnitudes more than what you're paying them. That 1%, do you realize that you would be panicking out at the bottom and selling all of your really good investments for less than their true value? And do you realize that regret would build inside you, and that regret is just another kind of form of fear, the fear of missing out? And that would drive you again to get back into your investments at a way too high of a level just to have a very even much more shortened period of time to make money before you get hit again with another down market. If you do that just once in your life, think of the multiple thousands that you lose because of your own horrible behavior. Okay? Think of how much money that person working with you saved you. So if they are able to do that, and maybe they have done that for you, if you're paying them 1% or 75 basis points per year, in the terms of reality and human behavior, they are worth magnitudes more to you than what you're paying them. Let's say your account is quite large, and that person that you're paying is, and even if it's me, let's say that the fee that you pay me is the largest expense that you have in your life. Guess what? It's supposed to be that way. Okay? It's supposed to, because you are investing in a portfolio that grows over time. Number two, you're paying for some advice that I'm preventing you from losing money. Except a house, most people spend umpteen tens upon tens of thousands of dollars on their automobiles, and what do? They depreciate to zero. And you don't hear anybody bitching and complaining about the $20,000 of depreciation that they literally just took out of their ass and flushed down the toilet that they don't have anymore just because they bought something new and it declined in value. You don't hear anybody complaining about that, but you'll hear the journalism industry out there vilifying everybody in my industry because we charge something. And it's like, let me tell you, I get it, but let's call reality reality. Most people out there aren't wealthy because they don't know how to behave. So if you are paying somebody that prevents you from panicking out at the bottom and getting too greedy at the top, then thank your lucky stars that you're dealing with somebody that's honest, that has a value. Because that value, as your account grows, my value or their value grows. Okay? It should be that way. It just seems weird because most people don't get to that point because they've killed themselves by then, in effect with their money. So anyway, that was just my little diatribe on me focusing on the value of what other people like me do or try to do. And I'm going to take a sip of coffee. So now it's your turn to talk for 10 seconds. 1,
okay.
2, 3.
And drink. Every time Mike says
nice.
investing and drink.
So anyway, that part's done. Second part. Most people that are in my industry, most people that work for my company, they look at me and my partner in my office like we have 5 heads. We simply don't think the same. And my clients kind of get that too. Since we're talking out right now, and by the way, Chris, happy Valentine's Day. 1 day late.
That's so many people mad at me because you watched 30 Rock.
No.
Like a long time ago?
A long time ago we did, yeah.
There was a time where Jack he took this prostitute out and she was all drunk and she just kept yelling, Happy Valentine's Day. Oh. So I just kept telling everybody Happy Valentine's and they were just so mad. It's like you're saying Merry Missmas. It's Christmas.
Yeah. Good one. You should have said that when I was taking the sip of coffee.
I sent out internet cards with just her collapsed in a trash bag going, Happy Valentine's Day.
Cool. Good. Thank you for that. No, I'm just being mean to Chris.
I'm not the huggy sort. My own daughter said, we're not the huggy family.
But you do wear one when you watch TV. Aren't those called huggies?
No.
Snuggies, that's what it is, right?
When I'm dead, go ahead and slip one of those on me. Other than that.
Hold on a second.
Yeah, when I'm
Dear
lying
Diary,
in the
Chris.
casket. Is that a Snuggie on him? Yeah, he said we could do it as soon as he died.
And it's a fishnet one. Somebody stole our humor. Did you see the commercial on TV where it might be Geico or somebody, where it was Pete guys robbing an armored car?
Oh, with the fishnets?
Yeah, and all of them have normal nylons, and the one guy has fishnet, and some lady on the street, Bob Farkas, that's you? No, it's not me. I love that one.
But I always crack up. My wife tells me to grow up because they go, you need a Snickers with nut butter. And every time they say nut butter, I laugh. Just like, grow up. How old are you?
Okay, so back to investing. Where was I going to go with this? Well, firstly, I was getting to how people look at me and they don't understand what's going on. First analogy I've got for you. You, the client, you, the person where you feel that anxiety when you look at your investment statement go down. I don't feel that anxiety. And if anybody was going to feel it more than you, it would be me. Because I've got hundreds of you depending on me. So I know when you get a low statement, I can actually feel a vibration in the force. And it's very negative. Like the dark side is trying to take over my clients. I literally, maybe not exactly that way, but there's some trepidation.
You've been in the business long enough to know when there's probably a disturbance.
Yeah, in the force. Yeah. A disturbance in the force. And yeah, it's not some small planet blowing up, but it's kind of like that because I know that there is a lot of anxiety being created when people open up their statements and it's lower. And if anybody had more anxiety, it would be me. Because, like I said, you all depend on me. And I know I have to deal with you and counsel you, reassure you, keep the troops in line, make sure that you know that I care. But I don't feel more anxiety than you. When that happens, it's nothing more. The way that I react to it, I feel nothing but like extra snow on the ground, where I realize that I might have to shovel before I drive to work. And when I drive to work, I'm going to have to drive more slowly.
It's not a problem. It's an inconvenience.
Exactly. So why would I think that way? Well, because I know that it's temporary. I know that the tick-tock of time and the marking off of days on the calendar, or if you live in Idaho, marking off the days on the inside of your cave or your mobile home. I'm just kidding, because Chris lives so close to Idaho. But just make it. All the Idaho people, we can hear them pressing pause. So anyway,
you think it's funny, Chris? I know where you park your house.
Exactly. So when you're marking those days off, sure as hell, I know that we're not going to have a foot of snow in June, and June's going to be here before you know it. So I don't let the snow get me down. In fact, I enjoy skiing in it, but that's another thing.
In fact, I've done this podcast long enough where I know people have said they think you fake all this optimism just to go against the grain.
Do you know what it is, though? Two things. People are stupid, and I'm a realist. People are stupidly pessimistic, and I just happen to be, if you knew the way that I grew up, I'm a realist. I have seen reality hit me in the face. And
I've seen crap that'll turn you white.
Yeah, or like my grandpa would say, I've been hit in the face with a sock full of you-know-what with the hole in a toe,
I have not heard that one.
Yeah, okay. So anyway, that is an old, probably World War I saying, knowing my grandpa. But anyway, I know what reality is. And reality, if you truly look at the reality of the world, of the human race, you have to be optimistic, because that's where the facts lead you. Okay? The path of human existence is an upward sloping chart. And I get it. Most people don't. And I don't know why. But I get that. So it's not optimism. It's just me being a realist. I know that the earth is not going to end on my nickel. I know that I'm very happy with reality. I try to get along with reality. And I realize that some days, like all of us, I wish reality was a damn sight different than it actually is, but it just is. So I'm not overly optimistic. I have a very good foot in the camp of what reality is. And so reality is that the snow on the ground is temporary. And it's always temporary. There's never been a July where we have a foot of snow on the ground, okay? I'm not looking up those facts, but I feel pretty confident in stating that.
Even in the Arctic, it's starting to be temporary. So.
Yeah. So anyway,
so eventually it all goes away.
Yeah, and the markets. There's never been a down market that's taken everything to zero. They're always temporary. So if they're always temporary, what the frick are you worried about? Well, you're human. You worry about stuff. I get it. I've been through enough stuff that I don't worry so much anymore. Like if somebody got off a landing craft at D-Day, I don't think they probably worried too much for the rest of their life about anything.
About just driving down to Denny's.
Yeah, maybe they worried about the health of their children, something they couldn't control. But if you've been through some horrific thing like that, well, guess what? There's not a hell of a lot to be scared of after that. So anyway.
I think also if you're walking your dog and it starts to freak out, you're kind of fine. But if you're walking your dog and you see someone else's dog freaking out, you worry because you're not in control of that dog.
Exactly. Yeah.
So you're in control of all the dogs.
I am. Yeah. Or I try to be. So when I know that every down market is temporary, it's not me being optimistic. It's crack open a book, crack open Google, and search whatever down market. Yeah, whatever down market has taken everything to zero, and it ain't never happened. It hasn't ever happened. Okay, that's just reality. So why? That's the first thing. the analogy of snow being temporary and a down market being temporary. And we're talking right now, the market's not down. It was down in December. It's going back up now. Big deal, big deal. But I'm talking about it to try to give you guys some knowledge, not really knowledge, some understanding. That's what I'm trying to give the podcast listener, is trying to simplify it a little bit, give you some understanding about what the reality of the situation is. The media cannot tell you that every down market is temporary, because they tell you 5 or 6 times, you got it. You're never going to listen to them again because you got the message. There's nothing ever to say. Okay? That's kind of me. So what I do, and you being a client as a listener, I take things to an nth degree. My whole industry wants you to behave correctly, but they want to sell you a whole bunch of crap. Okay? They want to sell you annuities, mutual funds, unit investment trust, equity indexed annuities, all kinds of bullshit that I just don't like. They are helpful, but they're helpful to such a small portion of the population that there's no reason to talk about it all the time, because, most of the population you don't have to worry about because they are not investors, don't have any money, or don't want to be investors. So that's 90% of everybody out there, or maybe 80. That's a pretty good sifter. When you're an anthropologist and you're sifting, that means that most of the stuff you're sifting you don't want to look at, okay? So when you're looking for, prehistoric bones, they're pretty rare. So anyway, that's...
I've heard.
Yeah, and so we're only dealing with a subset of the population, and the people that are so scared in that subset that would need these annuities, that actually need. I'm not talking able to be sold. That's a whole thing. I'm talking about that truly need something like that, I think is a lot smaller when you actually, approach a human as a human being instead of a sales point. I think the needs are a lot less than what my industry does. But I digress. Why don't I mess with all that stuff? Because here's my point. It's very efficient. It's kind of like a race car. You try to add lightness. You try to make it lighter so the horsepower that you already have is more valuable, that makes more of an impact. So my feeling is, if I can get you to behave correctly, then we're adding lightness right there. Okay, we already have good horsepower. I don't want to just throw luggage in the trunk of my race car. I want it to be efficient as possible, because I know that the downs are temporary. So what matters to me most? Offense, horsepower, the ability to be light and efficient. So I don't add annuities with extra expenses. I don't add mutual funds with extra expenses. Okay? I don't add anything that has extra expenses. I just want to own really good companies for the long term, because if I can get you to behave well and not panic out in a downturn, if you're going to own something for 20 years, I for damn sure don't want to own some packaged product that somebody in my industry in New York thought of, pulled out of their ass, gave to the salespeople and said, hey, go sell this to the masses. I would rather own for 20 years darn near any company that you can think of that's publicly traded, okay? Because if you think about it, a mutual fund company, what's their business? Managing money. How do they make more money? By getting more people to give them more money, okay? Little bit convoluted. It's okay. There's good mutual fund firms out there. It's kind of what I do. But I try to be as efficient and as non-bullshitty as possible, if that's a word. So
I don't know, but it's our new slogan on our shirt.
So anyway, I try to just be on the razor's edge of efficiency, because that's what's going to make you the most money and make you the happiest in the upturns, and be able to give you something good to look upon, like the summertime, like barbecuing last summer when there's a foot of snow on the ground. You'll get to barbecue again. Just you got to wait if you want the green grass. Same thing. Your account's going to even surprise you to the better than what you can imagine right now. You just got to wait a bit. Okay? Got to wait a while. So if you're going to behave well, why not own the best stuff? My feeling is, if I'm going to invest in a company, I've got it handled where to allocate capital. If you've got millions upon millions, then we don't even want to buy the common stock of other companies. You want your own company. You want your own McDonald's. You want your own Zips. You want your own 7-Eleven. You want your own gas station. You want your own empire of maybe 20 rental houses, something like that. If you don't want that or don't have the money, then we step in and start to buy common stock of the other companies. What are the other companies? This is not a solicitation to buy or sell. This is just me saying what companies that I think are good for explanation purposes. Verizon. Do you pay a phone bill? Yeah. Verizon? I wouldn't mind owning that company for 20 years. Okay? Microsoft, Johnson & Johnson, Merck, AbbVie, Abbott Labs. You look on the TV, there's a little white hockey puck thing that looks like between the size of a quarter and a 50-cent piece that you put your phone by it, and it tells you what your blood sugar level is without sticking yourself all the time. Pretty cool, huh? Constant blood sugar monitoring. I'll have some of that, please.
I don't want to know that. That's information I don't want to know.
Chris, that's funny. That's fun, more funny than you
I've been asked for it. I don't want to know it.
So these companies out there, they are not they're not like a money management firm trying to schmooze more money out of everybody and say how good they are. They're trying to sell more hamburgers. They're trying to sell more soap. They're trying to sell more iPhones. They're trying to sell more stuff on the internet. Do you see? It's nice to have those specializations out there. It's nice to own those awesome companies. And those awesome companies, when you own them for decades in a row, there isn't a mutual fund that's going to keep up with them because the mutual fund, it just doesn't. It's too many things at once. A mutual fund company, they have to pretty much abide by the Investment Company Act of 1940, which means that they have to it has to be a truly diversified investment. And they own so much stuff, it becomes a diversified investment. And somebody like me, I believe in diversification, but I do not believe at all in asset allocation. My industry, they want you to own, they have this big pie chart that has all kinds of crap that you've never even heard of, and they want you to own a little bit out of all of it because they think that it's good. Remember, my industry is the one that pretty much almost went broke in 2007, 2008. They blew themselves up. They're missing fingers. Why would you trust them with your fireworks? Okay? Remember that.
Experience.
Yeah. Yeah, maybe. So anyway, I like to own the good companies for the long haul. And here's another kicker that nobody talks about. And when I talk about it, not to clients, because clients are interested. When I share this with people from my own industry, their eyes glaze over and they would rather be in they just simply don't get it. It's like I'm speaking a different language. Dividends. Dividends are cash flow from companies. The vast majority of companies that pay dividends increase them every year. Look at your mutual fund statement. Look at your annuity statement. Tell me the cash flow that's increasing from that. You're not getting any. You're not getting an increasing cash flow. I already know because I've done my research. I know what's out there. My industry doesn't tell you that somebody like Johnson & Johnson has raised their dividend every year for something like 45 or 50 years in a row. In a row. Okay? They've been raising a dividend longer than you've probably been investing. Oh, I wouldn't want to own that. I mean, come on. Microsoft is raising their dividend. Intel raises their dividend. Verizon, these companies, the only company that I remember that didn't raise their dividend, everybody wanted to talk about on the radio like a decade ago, and I thought it was one of the shittiest investments you could have, and that was WWP here in Spokane, and then also known as Avista. I mean, you think you should invest in that? I never tell people no. I tell them hell no, because they weren't making enough money to even cover the dividend. So how are they going to raise the dividend if they don't have enough cash flow? They can't. So there you go. It was a non-starter with me. And it made me very unpopular. But it's called reality, people. It's not called an opinion. It's called a set of facts. You can have your own opinion, but you're not entitled to your own set of facts. The facts are they never made enough money to cover their dividend. They were having to borrow money, float bond, do accounting tricks because they didn't have enough cash flow. Lower the dividend a little bit and be a normal company. But no. But I digress. That's just one instance of something I don't like. Most of the companies that pay dividends, they raise them. Guess what? If they raise them yearly, that becomes pretty powerful. You own that company 30, 40 years, 25 years. You're probably looking at getting as much per year from the dividend that they've been raising over those 2.5 decades, as much as your original investment 2.5 decades ago. Sure as hell doesn't happen in any mutual fund that I can think of in my 30-year career. So I digress. If I can get my clients to behave properly, not panic out, be mellow, and that also means if you're close to an income situation, in other words, you're close to not working as much or at all anymore, and you're taking income from investments, that means keeping 1 to 2 years income needs in cash. That way, when everybody on the news talks about, oh, God, if you retire and the market goes down when you retire, you're screwed. No, you're not. That's just somebody that's an idiot moving their mouth, okay? It happens to, it can't exist that way. If all the people retired in the year 2007 and 2008, if they were all truly well unscrewed, we'd have like a revolution on our hands. So
Yeah, but a really slow, probably late in the afternoon revolution.
Yeah, it can't.
It probably canceled at 4 because they had to have dinner.
I get your humor. It's pretty funny. It is. There's people out.
I'm only speaking because of I know some old people.
You got a definite smirk. I'd say that was a smirk-worthy comment for sure. For sure. So anyway, if you're going to behave well, own the good stuff and keep enough in cash that you don't panic. Giddy up, done. Okay? Everybody in the world wants to come out with all these scenarios. What happens if the market goes down when you retire? What happens if the market goes down when you retire? What happens if it goes down right before you retire? What happens if it goes down 1 or 2 years before? I don't give a damn. I've already planned for it. It's called having enough money in cash that you don't have to take withdrawals from your investments for that period of time. Look at all of the negative market events in the past 100 years, and you're going to find that if you have 2 years of income in cash, you're pretty well taken care of. Actually, maybe a little bit more. I tend to like a year to a year and a half, but I'm a little bit more of an equity zealot than most people because I'm more realistic than most people. I know that things aren't as crappy as people think that they are. People like to point out the crappiness in the world. And it's not always great all the time, but it's typically not as crappy as people think.
Well, only the crap really gets reported. I mean, how many times we've talked about that? Right. How many times have we seen those little tidbit magazines? And they're like 2 pages, and it's all good news, but it's 2 pages at most.
Yeah.
And then you look, Spokesman Review or something, and it's 100 pages of this is what happened yesterday, and it's all bad.
Yeah, this is how many people died in a way that they didn't want to.
Yeah. Happy birthday.
So that's why I'm the way that I am. If I can get my clients to behave, well, then I want to own the good stuff that doesn't add any expense to what we're trying to do. And when we own companies, what's nice, they're not trying to when I own companies, they're not trying to compete with me. I'm not trying to own a mutual fund company that says that they're better than me at managing money. I want to own a company that says that they're better at selling hamburgers than I am. Done. That they're better at selling cigarettes. Done. That they're better at, providing cell phone service. Done. Better at selling software. All of that. Better at selling on the internet. Done. I want to own those companies damn near forever because that's where you're going to make the money. So that's pretty much it for this show. Don't forget that... call me. If you've listened to the podcast and if you have a comment, let's call and visit. Let's call me and we'll shoot the breeze for a while. The telephone number to my office is 509-747-5600. 888-203-5181. You can find us on the web already, because you already know that, because that's how you're listening to the podcast, right?
Right.
Okay.
And I will put the website, the email, and the phone number on the show notes.
Yeah, and I also try to promise to take a flu shot now yearly, so we will, so I won't get as sick, and so we can have more content on the air. And that's pretty much it. Thanks for listening. Thanks for helping, Chris.
Yeah, hey, look for our shirts. Just Google it, because it ain't ever happened. That's the new motto.
Okay, be back again next week.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.